The stock market has been one wild roller coaster. One day you hear the stock market is crashing in its worst day in a year, and just a few days later, you heard that the stock market has bounced right back up and now is breaking brand new record highs. These two news articles that I showed you are from the exact same week. So if you're wondering what's going on and if you should be cashing out of the stock market, make sure you watch this video until the end. What's up everybody, I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. Here's a quick summary of what we've been seeing happen in the stock market for the last year and a half. Back in February 2020, the stock market was breaking brand new record highs. Then came this pandemic, the economy shut down, and then in March 2020, we saw the stock market crash at record fast speeds. It was the fastest stock market sell-off that we have ever seen in the history of time. It even broke the Great Depression, and so we had the stock market in free fall back in March 2020. That's when the Federal Reserve Bank opened their money printer, and then they started flooding the markets with free money, and we started to see the market start to turn around in late March 2020. By August of 2020, we saw the stock market not only recover from all of its March and April crashes, we saw the stock market break brand new record highs in August of 2020. Then in September 2020, we saw a couple of changes happen in the economy, and that's when we started to see another stock market pullback. A lot of people talked about this as a 2.0 crash in September and October of 2020, where we saw 2 months of just the stock market tanking. And then in late October, we saw the stock market turn around quickly, and then we saw the stock market break brand new record highs in October. And then in March 2021, the Biden administration passed another stimulus bill, which injected another $2 trillion into the economy after 2 stimulus bills passed by Donald Trump in 2020. And then in July 2021, this is where things get interesting. In July 2021, we saw one of the worst days in the stock market in almost a year because of worries of this pandemic coming back, because of this virus resurging, because of potential lockdowns happening around the country. And so people were getting worried about that and all this inflation that we're seeing around us. And so we saw a massive one-day sell-off. Then, just a few days later, in the same week, we saw the stock market come back and break brand new record highs. This is where people are really starting to get worried about the economy and the stock market. People are worried about this pandemic coming back because you're seeing countries across the world go back into lockdown. Like Australia has reimposed some of their restrictions because of this pandemic. And then you have people worried about inflation because we're seeing the price of everything around us keep going up, and the Federal Reserve Bank and the government keep saying that this is transitory, but at the same time it's becoming harder for people to go out and afford their groceries. So people are not sure what's going on with inflation, and so people are naturally worried. What should I be doing with my stock market portfolio? Should I be cashing out? Well, before I talk about that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our new Discord server called the Guac Talk Community, because as you all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat with other minority mindset thinkers about the stock market, the real estate market, the cryptocurrency market, and all things building wealth. So if you want to learn more and start networking with other minority mindset thinkers, I got the link to how you can join our free Discord server in the description below. So if you have money in the market right now and you're trying to decide if this is the right time for you to sell and cash out, there's a few things you got to ask yourself. If you're trying to decide if this is the time for you to cash out and sell, there's 3 things you got to ask yourself. First, you have to know exactly what your strategy is in the market. I'm going to be talking about that. Second, depending on what your strategy is, you got to decide if this is the right time for you to sell. And then third, you also have to understand what's coming next. So let's start by diving into number 1 and really understanding what your strategy is in the stock market. For a lot of new people in the stock market, their strategy is let me find a hot stock, hopefully make some money on it, and sell for a profit. But that's not really a stock market strategy. When it comes to investing your money, there are generally 2 different ways that you can invest your money, 2 different broad sets of strategies. You have the active way and then the passive way. Within the active way, you have 2 different sub-strategies. You have trading, and then you have investing. So trading is when you hold on to a stock for less than a year. You're trying to make a quick buck and you're just trying to flip a stock. You don't really care about the stock's fundamentals or really anything like that. You're just trying to find a hot stock and sell it for a profit. The second way that you can be an active investor is now if you're trying to find undervalued companies. So you're spending a lot of time doing research on companies, you're reading the earnings reports, and you're trying to find a company that's undervalued that you believe in, and then you're going to buy this company and you're going to own it for the long term. I'm personally not a trader. It's more like gambling to me. Now, you can make a lot of money trading, but it's not for me. So for the purposes of this video, I'm not going to be talking about this. I'm going to be talking about actually investing your money into companies that you believe in for the long term. So that's active investing. On the passive side, the passive investing strategy is now where you're not trying to find an individual company. You're investing in things like ETFs. So an ETF is a basket of stocks. It stands for Exchange Traded Fund. And you can think of it literally like a basket or a group of stocks, where now you don't have to worry about trying to find the perfect company or the perfect stock. You're now going to invest in a fund that's going to give you exposure to a whole bunch of stocks. The advantage with this now is you don't have to worry about trying to find the perfect company, and you don't have to worry about doing all the research. So you don't have to worry about putting all the time and taking on all the risk, because if you invest your money into the wrong company and this company goes bankrupt, well, there goes your investment. The whole idea behind investing your money passively in ETFs is this is the way for you to invest your money into the stock market without spending all the time, without having to do all the research of investing your money in the stock market. Because ETFs, the whole idea behind it is now you can invest your money in the stock market and get the stock market returns without putting in all that work. Over the last century, the stock market has gone up by around 10% a year. But at the same time, so many people lose money in the market because they don't understand how to invest their money. They trade on emotions, or they invest on emotions. They find something that they like, they don't have a strategy, they buy it, they see their portfolio go down a little bit, and then they panic, and then they sell. You don't want to be one of those people. And so if you don't want to invest all this time and research trying to understand the stock market, ETFs and passive investing is an easy and great way to go, because now all you got to do is keep investing your money into these ETFs that give you exposure to the stock market. And now when the stock market goes up, your portfolio goes up. If the stock market goes down, your portfolio goes down. But if you believe in the stock market and the economy, this is an easy way for you to continually passively invest your money and compound your money without putting in any work. So if this is you right here and you have no plans to retire in the next 10 years, then you shouldn't be selling. You just got to stick to your strategy of passively investing your money. What that means is that every month or every week or every 2 weeks, whatever your strategy is, you want to consistently keep passively investing your money into these ETFs. That way you can keep growing your portfolio and keep growing your share of these ETFs. That way you can slowly build wealth and let it compound over time. Stock market crashes and dips are a part of the stock market. What you want to do as a passive investor is build a strategy where you're consistently automatically investing your money, that way your money keeps compounding and you don't even got to worry about it. Your money is going to keep growing, it's going to keep being invested, and now as the stock market grows over time, you will continue to see your portfolio grow. The key for this strategy to work as a passive investor is you want this to be passive. If you're opening up your portfolio every single day and now you're trying to sell or you're trying to buy when markets dip or go up or down, well, now you're not really being passive. If you want the strategy to work, you just got to set a cadence every week, every month, whatever it is, and now keep letting your money invest and compound. That way now you're passively investing your money and you're building shares of ETFs. That way now you're letting the market do its thing. Now, if you are looking for an easy way for you to passively invest your money, you should check out our sponsor Wealthfront, because they make this automation for passive investing super simple. The whole idea here is Wealthfront wants to make investing simple for you. So if you have $500 to invest, you can create an account and answer a few questions. That way Wealthfront can understand you and your goals, and then they will create your own portfolio of ETFs that will work to maximize your returns while minimizing your risks. That way you can try to get the best returns possible from your investment portfolio. Are you guaranteed to make money? No, you're never guaranteed to make money when you invest. But the whole idea here is Wealthfront wants to make investing simple, so now you don't have to worry about trying to find the perfect company or the perfect stock to invest in. They will work to create a portfolio of ETFs for you. If you want to see how it works, let's take a quick look at this product demo that Wealthfront put together. That way you can see what their clients are experiencing. So the reason why I like Wealthfront is, first, they make the investing process super simple. So anyone can start investing even if you have no idea of how the stock market works. And second, they're honest about the type of returns that they've gotten. It really bugs me when you hear these investing apps talk about, oh, if you just put your money in Tesla, you would have made $1 million. Well, that's cool and all, but you didn't. Look, past returns don't guarantee future returns, but you can see that if you have a risk tolerance of 8, what kind of returns that would have gotten you. So if you want to learn more and let Wealthfront invest your money for you with low-cost ETFs, I got the link to how you can do that in the description below. Plus, as a little bonus, they will manage your first $5,000 for free. So if you're one of these people and you're not thinking about retiring in the near future, you should not be selling. If you're over here, if you're an active investor and you're investing in individual companies and you've been keeping up with companies and now you're trying to figure out if you should be cashing out, well, there's a few questions you got to ask yourself if this is the right time for you to sell. If you want to get the best returns, you have to know why you do what you do. So if you're trying to figure out if this is the time for you to sell, you have to ask one of these 4 questions. If you do not fit into one of these 4 reasons, you should not be selling your stock. The first reason why you should be selling your stocks if you fall under this active investing strategy is if something is wrong. If you are investing in a company and this company has gone up wildly, but you're starting to see that things are changing. Maybe the executive structure is changing. Maybe their products are not as good as they used to be. Maybe something's wrong with the company. Maybe they're burning cash. Something is wrong with the company and you're worried that this company is going to go down. You're worried that this company is going to go bankrupt. Maybe this company is already going down. So if something's wrong with this company and you don't believe in this company the way that you used to, then that might be a reason for you to sell because this company is not what you used to believe. When you invested in this company, you believed in this company, you believed in this product, you believed in this value, but now you don't. If that's the case, well then that's a reason for you to sell because you don't want to just hold on to a company just because you owned it for so long. You only want to be investing in the companies that you believe in. The second reason when it's okay for you to sell is if you need the cash. Maybe you're trying to buy a new home. Maybe you need to buy a new car. Maybe you ran into some financial struggle where you need some cash and now you have cash in the stock market and you have some profits here sitting. Well, this is better for you to sell the stock, pull in the cash, than going into credit card debt to pay for this emergency. So if you have something where you need the cash, well, that's a reason for you to sell your stock at a profit because you can use this cash somewhere else. The third reason why you should consider selling is if you have a better investment opportunity somewhere else. If you think that one investment will pay you up to 4% a year and a second investment can pay you up to 8% a year and they both have the same level of risk, it doesn't make sense for you to keep this investment when this other investment has the opportunity to pay you a whole lot more, assuming that they have the same risk. And so now you kind of have to weigh the pros and cons between your investments. But if you have a better investment opportunity, maybe somebody has a really cool business idea, maybe you have your own business idea, maybe you find this other stock, this other investment that you really want to invest in, or some real estate that you want to own, and this is a great opportunity for you to invest in it, well then this is a reason for you to pull money out because you found a better investment opportunity somewhere else. What you don't want to do is make emotional decisions where you start to see an investment go up or down and then you sell it and now you're sitting on this cash with no idea of what to do next. Sure, there's nothing wrong with selling early and having some profits, but it's also good for you to understand why you're selling. If you can find another better investment opportunity, that's a great reason for you to sell because now you can take this money, take your profits, and put it into something that's going to make you more money, or at least hopefully because nothing's guaranteed. And the fourth reason why you should consider selling if you fall into this category is if you win. Let's say you find a company that you really believed in, you bought it when it was undervalued, and now years go by and now this company is overvalued. This company's stock price has gone up so much and now it's looking like the stock price is actually a little overvalued. At this point, you've probably made a lot of money and you won. You made the right decision. You found this company when it was undervalued, you rode it up, and now it's overvalued, and now it might be time for you to cash in your profits because you found the right company and you won. You came out of this investment transaction a winner, and so now it's time for you to pull your money out because you got exactly what you wanted. If you want to be an investor, meaning you want to invest in a company for the long term and you're trying to decide if you should cash out or not, and your reasons don't fall into these 4 categories, then you probably should not be cashing out. Because if you're wondering that, hey, there could be a stock market crash in the future, I don't know if it will happen or not, and I don't know when it will happen or not, and I don't know how big it will be or not, and you're thinking if you should just cash out because of that, well, that's not really a good reason for you to sell because there's no way for you to predict the future. It is impossible to time the market. This is again where you have to remind yourself of your strategy. If you are an investor, you don't want to be trying to time the market. That's what traders do. An investor is somebody who is going to hold on to a company for the long term because you believe in the underlying value of this company. If you believe in what your company is selling, if you believe in what they do, then you want to own it for the long term. And if the stock market crashes, the only thing that you should be doing is buying more unless something's wrong with the company. But if the stock price crashes and the company is still good fundamentally, well, this is a great opportunity for you to come in and buy more. So if you are an investor, remember, you got to make your decisions fundamentally and financially, not emotionally. This brings me to the third thing that I want to talk about, which is on everybody's mind, which is what's coming next. So the stock market and our economy are similar but different. The stock market is a place where people go to bet their money and invest their money based off of what they think is going to happen in the economy in the future. So if you want to understand or kind of get an idea of what's coming next in the stock market, you got to start by understanding what's going on in the economy. Because if you understand the economy, then you can get a better idea of what might be coming next in the stock market. The biggest concerns that our economy has right now are three main things. One is the unemployment issue, second is this virus, and third is inflation. The first thing with the unemployment is right now we have more than 12 million Americans that are collecting unemployment checks, and at the same time we also have millions of Americans that are quitting their jobs because of something called the Great Resignation. People are not happy with their work, they're not happy, they're not getting fulfilled from their jobs, and so now they're just quitting. And so companies are having a tough time finding employees, they're having a tough time keeping employees, and so our entire economic workforce is changing. And so this is a problem because the stock market is made up of companies. And if companies cannot find people, they don't have labor, they don't have employees to work, then companies can't produce bigger profits. So this is something you want to pay attention to because right now there's a lot of issues with companies trying to find work. On one hand, you have a lot of people that are not going back to work, either because they're scared of getting sick or because they're making more money on unemployment than they would be if they were working, or maybe people don't have the ability to go back physically into the office because now they have to take care of their kids, or if they have to take care of a sick parent or whatever. And so because of that, you have a lot of people that are not working while many companies are not able to find employees. So it's a very strange problem in our economy. This is something that I've never seen before, where you have so many companies that are looking for employees and you have so many people that are not working. So it's kind of a weird situation. And the thing that you want to pay attention to here is unemployment benefits. If unemployment benefits start to go away, how is that going to affect the economy? How is that going to affect companies? And so this is something that we'll see really play out over the next 6 months. But if companies are not able to attract employees, that's going to be a big problem. And that could push the price of products even higher. And if people are not working and the unemployment checks stop, now people are going to have less income, less money in the bank account, and the prices of things are going to be higher, which would make it even harder for our economy to grow. The second issue is this virus. Now, this is becoming even more polarized than it was before because now some people are really just fed up over this virus and they cannot believe that some countries are going back into lockdowns, and they cannot believe that people are still talking about this virus about 1.5 years into this pandemic. And then you have the second group of people that are very scared of this virus and are now going back into their homes, and they're not going to be spending money again, and they're not going to be going out and doing things again until things settle down again. My goal is not to sit here and argue over what's going on. My goal is for you to understand what is going on. That way you can make smarter decisions with your money. The reality is this is becoming an issue again. We've already seen it in the stock market, where we've seen big one-day swings in the stock market because people are getting worried about this virus again. And if other countries around the world start to lock down again, that's going to hurt our supply chain and our economy because we live in a world global economy. And so if countries around the world are not able to produce products, we in the United States are not able to produce all of our products. And so that could slow down our economy, which is not good for our stock market or our economy. Not to mention the fact that a lot of companies in the United States thrive by selling things to people outside of the United States. So for example, travel companies. If you're a travel agent and now people are scared to travel again, or if they can't travel again, well, now your business is going to suffer. And finally, you want to pay attention to inflation. So the inflation issue is really hotly debated right now. The Federal Reserve Bank and the government keep saying that this inflation that we're seeing is transitory, meaning it's temporary. But at the same time, you have the same officials saying, yeah, this inflation that we're seeing is a lot worse and it's lasting a lot longer than we expect. And we don't know how long it's going to last, but it's still temporary. Our economy relies on spending. Every company on the stock market sells something. And now if people cannot afford things because the cost of living is so expensive, groceries are expensive, vacations are expensive, and so if people don't have money to afford things because everything is so expensive, then they're not going to be spending as much money, which means companies won't be making as much money. And so if inflation keeps rising way faster than wages, then what's going to happen is now people are going to have less money to spend. If people have less money to spend, companies are going to be making less money. If companies are making less money, companies are going to be hurting financially, which will ultimately hurt the stock market. So this is something you want to pay attention to. Right now, the Fed and the government keep saying it's transitory, but as of now, the price of everything around us keeps going up. So you definitely want to keep an eye on this, because if inflation does not get checked sooner than later, eventually we're going to hit a point where people are going to be struggling just to afford their daily lives, and nobody wants to see that happen. If you enjoyed this video, here's the video on how to manage your money like wealthy people that I think you love, and while you're at it, download our free stock market investing PDF, and as always, keep hustling. The first place your money needs to go is obviously your basic needs. This is your car, your house, your food, your water, your basic necessities that you need in order to survive.